almost 18 months they front ran that decision. Since late 2017, they started voraciously buying it, made the announcement in 2019. In 2018, the central banks bought more gold as a group than they had in the 50 years combined. So the drive to de-dollarize and accumulate gold is real. And I think a situation like what we're seeing now will only exacerbate the timeline, will only accentuate how this all plays out.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals Investments. Andy, thanks for joining us again this Thursday. It's Thursday, May 7th, right?
I know the feeling. It's good to be back with you again, Dunnigan. It's always nice to see you.
We've had some rather tumultuous times in the market, major equity markets, and the oil market. The commodities have been crazy, and the interest rates with the 10-year Treasury yield plunging down into places it's never been before. There was a huge flash of flurry of people scrambling when the markets were down 35%, and it's eerily less noisy right now when we're in this portion of the bounce that people are wondering what comes next. Just wanted to check in with you on what you're seeing on the ground in the gold and silver physical market. Demand, supply, producers, all that sort of thing, market participants. You have insight into the market that we don't have, and we'd like you to share what you're seeing with us.
Yeah, sure. No, it's similar. It's eerie. It's interesting, rather, the how quiet it is. It's eerily quiet right now compared to what it was a couple of weeks ago. Now, don't get me wrong. We're still really, really, really busy, but there isn't the anxiety that was permeating through the industry that we saw in March right now. And, it's kind of following a pattern, a similar pattern, the way that markets do. If you look at what happened in 1929 through 1932, it's exactly the same. A market that fell by 35%. Panic sets in. And then as the little bit of calm permeates with time, it's been a little bit of time. Things aren't going pear-shaped yet. There's hope. There's hope that and optimism that we're going to open back up the economy. Optimism coming from President Trump in his rhetoric. And if you look at what happened in 1929, you see a market that fell by 35%, almost to the exact percentage of what we saw in March. And then we saw a little bit of time. Time kind of heals the fear and the anxiety. And through that time, at the time, you had President Hoover who said things are getting better. By March of 1930, he was saying things are getting better. By May of 1930, he said the worst is behind us. And then, of course, between that point and 1932, the market lost 90% of its value. So if we look at it at a parallel, I'm not saying that we're going to see this market lose 90% of its value, but what I am saying is that we're seeing this calm, kind of a dead cat bounce, optimism. And my biggest fear, Dunnigan, is that this comes back this fall with a vengeance, the way the Spanish flu did in 1918, which killed 6 times as many people as the first wave. That second wave come cold and flu season. If we can make it through that, great. Maybe we're on the way to recovery. But if it comes back with a vengeance, I'm very, very concerned as to what that means for my industry. I think you'll find very quickly that all supply chains will just get shut off completely and totally. It's very interesting. The people in this country seem to have a immediacy as it pertains to their reaction with information, and their memory is very short. And I guess sometimes that's good, but I think we should not forget what we just saw a month ago. And the bottom line is simply this, that I have always believed, for a very long time anyway, that the market would be defined in 2 ways. The people on the outside who have never owned precious metals, but maybe have been urged to do so, will define it by prices that are too expensive and the market that got away. People on the inside, like you and I, however, I believe will view it differently. We'll notice the high prices, that's for sure. But I think we'll view it and identify it by a market that is impossible to source good product. And you can see what happens in the blink of an eye in March when demand overwhelms the supply in the market. The precious metals market has been clawing and scraping back to try to regain some semblance of a normal market in terms of its supply chain. But in reality, I don't think that's happened hardly a bit. The U.S. Mint and the Canadian Mint are back online, but working at a marginalized capacity at best. The Perth Mint has been really the savior to my company and provided a tremendous amount of product through all of this. But in general, product availability is as marginalized as I've seen it in 30 years, and it is incredibly fragile right now. It's kind of like it's been put back together with bubble gum and Scotch tape. You see one more gyration, and I'm telling you that getting product will be all but impossible. So right now, it's the last train out. Maybe it's not. It's not if all of a sudden we see some sort of a cure, some sort of a magic bullet that makes people want to get back out and go and spend and get the economy roaring again. But short of that, I will stay consistent with you. My biggest concern, my biggest fear, at least as far as owning a precious metals company, done again, is what does supply look like 6 weeks from now? What does supply look like 6 months from now? And quite frankly, I can't tell you, and I'm concerned by it. So this little respite, to me, well, it's nice because we've been working 18 and 20-hour days, but I don't look at it as the beginning of a new trend in this industry.
You know, it's interesting because some of the people who reached out to me, individuals who I spoke with on the phone, talked to me during those first and middle weeks of March and talked to me about, oh, if only I had, my family members have been telling me, or you know, our channel is Reluctant Preppers, and they say, well, my brother was on me about this, or my husband was on me about this, and I didn't listen, and now look at my market, I wanted to get out of my IRA and get that moved over, but now things are down. Maybe I missed my chance. Maybe I'll just wait for a while, you know, because things were down by 20%, 25%, 30% at the time. And oh, by the way, the metals were already moving up and the premiums were moving up, and they're going, oh, I probably should have acted back when I could. And now that things are kind of, there's this lull for a moment. It's like being in the eye of a hurricane or something. Things have quieted down. So rather than having that rush of people saying, okay, now is my chance, because now I got a little bit of recovery on my stocks, and now I can liquidate those, and now I can get some physical. So it's a very strange thing, human psychology, as you were mentioning.
Very much so. I will say the one thing that is very different this time, this cycle, is the amount of people whom have never had any interest in precious metals whatsoever before. And so they're not as reluctant to pay higher premiums that are the norm right now because they've never bought it at all. And I think it was a very jarring experience to watch 40% of their wealth evaporate in March. And so there is a good number of people who really just don't care about the premium and are looking at it, I think, the correct way. And I know that sounds somewhat almost disingenuous that the price doesn't matter. But in reality, if we go back a month ago and think about what we were confronted with, did the price really matter? Does the price really matter if things go where a lot of us think they ultimately will? So I guess for me, it's not about the dollar price. It's about the number of ounces that you own. And it always has been that way. And I'm not trying to sound trite and ignore the reality of cost. But here again, I think that getting the physical product to me is just as important as getting a good price, because it's becoming harder and harder to do so. And here again, what we're seeing right now is not really a decrease in the premiums. We're just seeing a little bit of a decrease in the crazy demand. But the higher premiums still indicate difficulty getting product. The U.S. Mint has owed me thousands and thousands and thousands of Silver Eagles for the better part of a month, and I've only gotten little dribs and drabs of them. Last week, there was no allocation on Monday, as they're supposed to do, and nor did many of my suppliers receive any allocation last week. And so we're at the mercy of the U.S. Mint. I noticed one of the questions on your site was, "What's the deal with the Canadian Mint?" I am happy to report that as of this coming next Monday, I will be 100% caught up with the Royal Canadian Mint. And boy, did they really mess me up. And it's indicative of what I'm talking about. A normal supply chain uh, involves placing orders with a mint or a major refinery or a major distributor, getting acknowledgement of that order and expecting it in a couple of days until it closes down and a reality is born. And that's what we saw with the RCM closing. And it really created a lot of problems for me, probably with some of your listeners. What was done with great integrity and normal business practices in mind turned out to be a nightmare. When we bought 27,000 silver maple leafs and the mint closed down without any notice, and we were on the hook. We didn't get our product for weeks on end. And so finally they're opening back up. And you know what? Dunnigan, I learned a big lesson through all of this. And that is the importance of being proactive, the importance of selling stuff that's in stock, because quite frankly, selling stuff that isn't in stock is part of this business. Every company in this industry does that because we rely upon a normal supply chain. But this just goes to show what can happen with a disruption in the supply chain. And I'm here to tell you that the supply chain right now has not gotten any better, other than some pieces of chewed bubble gum and Scotch tape, covering up the holes in the road. But at this point, it's a little better than it was, and there's still availability. But I by no means think that this is a resumption of normal business practices in this industry. Quite to the contrary, for people who are looking to get back in, this is the best opportunity we've seen since February, at least in terms of product. The premium, it's pretty much the same as it's been for the past 8 weeks. Higher than I've ever seen it in 30 years. But here again, that's indicative of massive demand throughout the country, throughout the world. And 5 major mints, US, Canada, South Africa, Austria, and Australia, struggling their very best just to keep up with really marginalized results at best.
You mentioned the economic environment we find ourselves in. Michael Pinto, who's a widely followed financial manager and analyst, was just on yesterday, and he talked to us about what would be the ideal macro situation within which precious metals would be the ideal thing to start holding. And he let us know that he's increased his holdings of precious metals from 5% to 10% to 20% in his hedged portfolio strategy. And what he described was in an arena of increased money supply and negative real interest rates. And it's just shocking to see what that could potentially do to people's dollars, what they can do to anything that's denominated in dollars. So one of the dynamics that people are watching that seemed to influence both the equities markets and the metals markets even today was this news story that broke. We saw it first on Zero Hedge coming out and saying by the end of this year or the beginning of 2021 that the futures market is showing prediction by the futures players that interest rates may be going even negative in the U.S. That was later carried out by Reuters and other news feeds in the day. What is your take on the impact of a potential negative interest rates, nominal interest rates in the U.S. on the markets and particularly on precious metals?
Well, the Fed funds rate, what you're talking about, is arguably the most important interest rate index there is. It is chiefly responsible for things like auto loans and bank deposits and mortgages. It's a big deal. When we see interest rates starting to head negative, it portrays certainly brighter times ahead for precious metals. Remember, there is a negative or inverse relationship between real interest rates and precious metals. That's called Gibson's paradox. It speaks of that inverse relationship, whereby if you have really high interest rates, there is no incentive to buy gold. People would buy treasuries with safety. If you have low interest rates and crazy enough to even contemplate negative interest rates, it means you have zero opportunity cost in buying something that doesn't pay you any interest, like gold. And so it really speaks, I think, of brighter days ahead for precious metals. I think it speaks also of scary days ahead for savers, for banks, for market volatility, and for the distortions that this creates, forcing people into speculation, forcing people into the stock market in an effort to, following the Keynesian playbook, spur the economy through spending and consumption and forcing people away from savings. And, it's crazy to even contemplate putting money into a bank guaranteeing to get back less than we started with. But that's really the sad state of affairs as to where we are right now, in the respect that how do you get the engine of growth running again? Certainly saving and investing and reinvesting is not the idea behind what they're trying to do with negative interest rates. It is to speculate and get people out and spend money and speculate. Don't save, heaven forbid, save, spend, consume, speculate. And that's very frightening to me, actually, when you think about what that means going forward and the level of volatility that portrays. But from a business standpoint, I think it means anyone who owns gold and silver can expect higher prices moving forward with zero opportunity costs in acquiring them, and probably also means great volatility in the stock market. And as it pertains to the bond market, it's something that I've expected. I've expected this rush to safety in treasuries and in U.S. bond market. But what the Fed and the Treasury have proven that they will do by rampant printing and money creation and flat-out monetization, to me, speaks of a bond market that will turn over due to massive inflation. And when that happens, when you have a stock market turning over and a bond market turning over simultaneously, now normally they move inverse of each other, but because interest rates are where they are positively correlated. For the first time in a long time, if ever, they are positively correlated. Both would be affected by rising interest rates. So if all of a sudden this massive money creation and printing and inflation starts to sour the rest of the world on the U.S. dollar, and the U.S. dollar starts to move away from us, and you see interest rates rise, collapsing both the stock and the bond market, there is not a safer place on the planet to be, maybe anywhere else to be, than precious metals. So negative interest rates to me are not a good thing whatsoever. They are bizarro world, and they can only lead to greater distortions in all of the financial assets of the world, and probably far greater demand for precious metals before this is all said and done.
We've had, Rick Rule was on from Sprott Asset Management. He was talking about in the past cycles that have been like this, gold has, when it started to make its move, as it did starting from last summer, has continued on typically for 2 to 3 to 5 years. So he's looking for a 2 to 3 year period now when there will be a variety of reasons why that gets recognized as a reliable store of value and a source and attracting a lot of attention. One of the other themes that comes out in people who've been calling and talking to us is about IRAs, because they look around and they go, what can I protect? Well, my company 401k, as long as I still have my job, there's not a lot I can do about that. Sometimes they've just taken some savings cash and decided they want to protect that. But can you talk to us about what's really possible for people to do with, if they've got IRAs, whether it's a traditional IRA, whether it's a Roth IRA, whether it's a SEP IRA or an inherited IRA, what can people do to really protect those funds?
Well, you can buy physical precious metals in them, have them held by a custodian, and they're really great for people who are nearing retirement. Because you can do what's called an in-kind distribution out of the IRA. Take the metal that's being held for you in lieu of a cash distribution. And so I find it to be really, 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 really applicable to people who are either at the distribution age or nearing it. Anyone who is over 59 and a half in particular, who can withdraw funds out of the IRAs without any penalty. But that's what's really neat about it, is that you're able to make a bigger splash in the gold pool without writing out a big check. And you can buy physical gold and silver. The only restriction really is that it has to, if it's not up, has to be at least 3.9 fine gold and 3.9 fine silver. The only exception are gold eagles, which are not 24 karat. Those are the only non-24 karat gold coins allowed in a precious metals IRA. But the bottom line is you fill it with gold and silver, or platinum, whatever you want, and then you can start taking distribution on it as we get to the distribution age, whether it's a mandatory distribution when you're 70 and a half or a voluntary distribution 2 days after you set up the account. You can actually pull the metal out being held for you and take possession of it. And that is a taxable event unless it's in a Roth. But I do like it a lot in that respect that there are very few IRAs that you can actually take possession of the investment that you're investing in. It's not like if you're going to buy an oil stock that Texaco is going to send you barrels of oil. But with this, if you want to take physical possession of your metal, you can. And so for that reason, I do like the precious metals IRA because it allows you to own the real thing and take possession of it when needed, or if you need it just because, in an immediate type of response. You can liquidate it, pay the taxes, applicable penalty if you're under 59 and a half, and get your metal. If you believe enough in something to have it in your IRA, the ability to take possession of it is very cool. So I do like that. The company that we work with most of the time is New Direction in Louisville, Colorado. It's as simple as transferring a portion of or rolling over the entire thing. It takes 10 minutes online. Once that's set up and funded, we place a gold and silver order, have it held at one of the depositories of your choice, and you're done. You now have physical metal in your IRA that you can sell and get cash for, or take a distribution of in kind and have it sent to your house. Cool product.
Yeah, so one thing that I wanted to make sure we covered there was that if people have existing IRAs, like existing traditional IRAs, those existing traditional IRAs probably will not allow them to store precious metals. They'll need to get with one of the custodians who does support a self-directed IRA in order to do
There's
that.
There's a handful of them. Most don't allow it. Some do. We work with all of the ones that do. You don't have to use New Direction, but that's who we've had real good success with. And any of the custodians that do allow precious metals, we do work with, and we'll be happy to help people do that. But I think it's a great way to add gold and silver to your portfolio and take possession of it at some point down the road.
Okay, now you mentioned in along passing there about a depository for storage. That's another thing I want to talk about with storage, because we've had a lot of people calling. Some people saying, I want to hold it in my hand. I want to have it in my own possession because I feel like if you don't hold it, you don't own it, that sort of thing. Okay. Other people saying, well, I want to hold some of it, but I don't want to hold all of it. I want some of it to be stored for me. So can you talk us through the different storage options that people have and some of the pros and cons around those?
Well, in an IRA, more often than not, you're going to store it in the United States. It becomes very difficult. Well, not very difficult, but it becomes more challenging to store qualified funds outside the U.S., and you're much more restricted as to what you can and can't do. In an IRA, most of the people that we work with will store their metal at the Dakota Depository in Fargo, North Dakota. Albeit it could be Delaware Depository, it could be Brinks. There are many depositories that the custodians work with. But one of the conditions of a precious metals IRA is having it held by a custodian during the deferment process. So outside of an IRA, that's a different ball of wax altogether. And so outside the IRA, we have other options outside the country that we're very proud of, in particular our relationship with Brinks Canada. We have a couple of worldwide exclusives with them that we're very, very proud of, namely two of them. One, we offer the only fixed rate billing structure in the industry, meaning that we will only charge people for their storage based upon the number of ounces that they hold rather than the value it pertains. And that's unusual in the industry. The highest cost component of storage really is, or the largest cost component is insurance. And if what you're insuring goes higher, you have to charge more to the people whose goods you're insuring. We worked out a deal with Brinks where we were able to negotiate a fixed rate simply based upon the number of ounces that you store. It's kind of like betting on the come in the respect that the higher the price goes, in every other storage program, your storage rate would move up commensurate with the increase in the price of gold or silver. With our program, that's not the case. It's fixed rate. The higher the price goes is irrelevant. Your rate stays the same. We also have the only fully insured safe deposit box program in North America, in Toronto and in Vancouver with Brinks. The reason that is relevant is because of the way that the IRS qualifies what is and what is not reportable held outside the United States. The IRS has said recently, about 3-4 years ago, precious metals held outside the United States must be directly held in a non-financial institution in order to not be reportable. When we started our Brinks program almost a decade ago, we asked the IRS what they meant by directly held. And we asked them on several occasions through 2 different law firms, only to find out after 2 years of asking them that their response was, we reserve the right to not answer at this point, in typical IRS speak. So for our normal storage program at Brinks, we employed a highly redundant, segregated protocols so as to meet what we believed was the definition of directly held. Well, a couple years subsequent after that, they came out and they said, precious metals held outside the United States, in order to be not reportable, must be directly held in a non-financial institution. And they gave an example, not the example, but an example, safe deposit box. So we contacted Brinks immediately, and we asked them to allow us to build a program with their assistance in Toronto and in Vancouver as a fully insured safe deposit box program. There's nothing like it in the industry. 100% non-reportable via FACTA and FBAR to the U.S. government, following the law to the letter. It's a really cool program done again where if people are not able to get up to the facility to access the box, we simply send them a Federal Express air bill. They drop one of their 2 keys that they possess in the FedEx envelope, send it up to the facility where then business would be done under dual custody, 2 people, under camera. Whatever needed to be done, either an addition to or subtraction from the box, is done. A new certificate is sent back along with the key, and whatever other metal or what have you needs to be sent back to the client. But it's a really slick product so that if you can get up to the facility and access it, you can, and if not, you send a key, one of your 2 keys. They're also worth mentioning that it's a brand new state-of-the-art safe deposit box program in that normal safe deposit boxes have 2 keys, where the client has a key and the bank will hold a master key and you put them in together. This is a 1-key system where you hold the key and the only spare. And so you send one of your keys up there in the air bill that we provide, and business is done on your behalf under camera. A new certificate is then supersedes the previous, along with your key back, and you have metal held outside the country, fully segregated and 100% non-reportable. It's a great program, and one that we're very, very, very proud of.
And the other thing we wanted to get to is viewers' questions have been submitted ahead of your interview here. There's a wide range of them. A lot of these questions are ones that people have asked when they've spoken with me, and I wanted to get them in front of you. This one comes up a lot. It's about the form of how important is the form of precious metals, either gold or silver, that people purchase. It says, Mike Riley asks, I've stacked silver for a few years from various mints. Only about 1/3 of it is Eagles. Is it going to be hard to sell the 1-ounce bars from various mints during a run-up in prices?
No, not at all. Not at all. No, it's like generic soda versus Coca-Cola. If you're thirsty enough, the generic soda drinks just fine. If you had your druthers, you might drink the Coca-Cola, but point of it is that no, it's an ounce of silver is an ounce of silver, and it is less relevant what stamp is on it. I think it is more relevant when we talk about liquidity to stay away from giant items like a 100-ounce bar of silver versus 100 1-ounce rounds. You're 100 times better off owning 100 1-ounce rounds, and I would say that 10 times out of 10. So to me, the loss of liquidity comes with being penny wise and pound foolish in buying too big of items that diminish your liquidity. But having a bar versus an Eagle is not going to diminish it hardly at all. You may get a little less, but you'd pay a little less when you bought it, so that's fine. But in terms of it being not sought after or not wanted or shunned, no, not the case.
Ken Landon asks, to whom would you sell precious metals when the time comes? Would you take a paper check as payment? Will bartering play a role?
Those are all what-if questions that are hard to answer. I mean, if bartering does come into play, you're going to be damn glad you have it versus not having it at all. And I think that if things get so bad where we're afraid to take a paper check or a wire, we have bigger problems to worry about. And you'll be glad you own your precious metals in that environment as well. Typically, the way that markets work is they swing from overvaluation to undervaluation and start the cycle all over again. So while precious metals have arguably been very undervalued for a while, they'll reach a point of overvaluation, and there'll be a cycle in maybe blue chip stocks trading at single-digit price-to-earnings ratios and paying a 6% dividend. Or maybe it'll be that coastal real estate that people want so badly that is now selling at pennies on the dollar, or the cabin up in northern Minnesota that I'd love to have up on Gull Lake that maybe we'll be selling for pennies on the dollar. I don't know, but having value when everything around us is deflating, it will provide people options. They say in deflation, he or she who loses least wins. And I think we are heading into a deflationary period, one that will be fought by hyperinflationary policy by the Fed, but here again, everything is going to lose value in that scenario. And having something like gold and silver that are one of the only assets in the world that are not simultaneously someone else's liability will provide opportunities that others won't have, being solely in dollar and dollar-based investments.
Speaking of the dollar, we've got two back-to-back questions here that almost take opposite sides of the coin here. Without Excuse 2011 says, for the first time in history, the criminals have an unlimited printing press. With that, you don't really believe that gold and silver will ever attain true market prices, do you? How? Flip side of that, Victory CSA says, I guess there's just this litany of the Fed doing $3 trillion here, $4 trillion there, $6 trillion over the last quarter here, $1 trillion a day in short-term loans in the repo market. So with all this money printing necessary to keep the financial system on life support, in your opinion, at what point will the U.S. dollar precipitously fall, losing little remains of its purchasing power, and when will the physical price of gold and silver overwhelm the paper markets used to suppress the price of gold and silver?
Well, again, I'll go back to what I've been saying on your show now for 2 months. April of last year, the Bank of International Settlements reclassified gold as the only other Tier 1 asset on the planet. That tells you what the most powerful people in the world think of gold. They think it's going to be a central, integral part of the future moving forward. People in that level do not, in a vacuum, make a decision after 80 years of it only being U.S. Treasuries as a Tier 1 asset to invite gold to that party without it being a significant decision. When you talk about the crazy money printing, there are very few life rafts other than precious metals to protect you from that hyperinflationary printing press. But here's the thing. When world over it is being agreed upon that gold is now Tier 1 asset, if you simply keep printing money and destroying the value of the dollar. I mean, look at it this way, too. Remember, gold is at all-time highs against almost every major currency with the exception of the dollar. To me, the Achilles heel in all of this is the dollar. When does the dollar get called on the carpet? And I've seen now 2 statements, one of them by one of the Fed chiefs, and I don't know if it was St. Louis or not, where he cautioned that the dollar would be challenged for singular world reserve status. And last spring, the J.P. Morgan Private Wealth, the group of J.P. Morgan that works with their wealthiest clients, the centimillionaires and the billionaires, same thing. We want you to mitigate your exposure, they said to their depositors, to U.S. dollars through foreign currencies and precious metals because we are concerned it will be challenged for singular world reserve status. So here again, we are looking at this through the prism of a dollar that is overvalued. In just about every other country on the planet, gold and silver are at all-time highs. And so, for sure, gold is anyway, at all-time highs. So yes, I do think that ultimately gold and silver will reach their equilibrium. They will reach their fair price, free from manipulation. The only way you can successfully manipulate a market over an extended period of time is to push it in the direction that it is going. It has been very easy for the central banks to hold back the price of gold when everything else around us in equity. It's been very easy for them to hold back the price of gold and silver when nobody else wanted it and to manipulate it for their gain when no one else wanted it by goosing the equity markets and making it seem as though mutual funds and stock certificates are the only pavement to the road of retirement, it was very easy for them to do that. But when the rest of the world is waking up to that fallacy and running to gold and silver, to where it is now at all-time highs in just about every major currency on the planet, to where the Bank of International Settlements reclassifies it as the ultimate form of collateral, the days of holding back the price in earnest are over. And one of these days, we're going to wake up. And what I really think is going to happen is we're going to wake up one morning and find gold north of $2,000 an ounce. And I think it'll be catalyzed by, the catalyst will be a bank maybe in Europe that collapses or defaults. Think of all the repo problems that we've been having going all the way back to September of last year. And no one talks about it anymore because it's a coronavirus 24/7. But if you told me we wake up to find a major default by a European bank and the systemic reaction that would have world over, I think you'll see gold fly up through 2,000. It won't inch up. Something big is going to happen. It's going to push gold up very, very quickly, and it'll never come back down. And that's why people will look at this and say, damn it, I missed it. I missed it. It's too expensive right now. But it'll keep on running from that point forward because of its tier one status, because the central banks are going to sell dollars, especially as that starts to exacerbate. They'll sell dollars more rapidly to de-dollarize and accumulate gold to protect themselves against a sinking dollar. So ultimately this happens. How it plays out, when it plays out, I don't know. But all you need to know is the fact that they reclassified gold as a tier one asset. That is their playbook. How it plays out is yet to be seen.
I think you pointed out in the past when you discussed that was that before they announced that, there was unprecedented demand from central banks of physical acquisition of gold around the world, and then they admitted, okay, guys.
Almost 18 months they front-ran that decision. Since late 2017, they started voraciously buying it, made the announcement in 2019. In 2018, the central banks bought more gold as a group than they had in the 50 years combined. So the drive to de-dollarize and accumulate gold is real. And I think a situation like what we're seeing now will only exacerbate the timeline, will only accentuate how this all plays out. But I think in life, you just have to sometimes have strong fingertips. You need to be able to hang on. You need to trust your gut. The mathematics and the logic and the economics of a rising gold price in the face of a dollar that is being destroyed by the Federal Reserve and the Treasury will materialize. It's just a matter of how and just a matter of when.
You mentioned the central banks making their move prior to tipping their hand to the general public and others that hey, this is what we did. We have a quote here from the Great Depression. This is from 1932 from a author, Garrett, and submitted by Anna Kraslinsky, who says, "The faith is lost. All with one impulse, people rush to seize the gold itself as the only reality left. Not only people as individuals, banks also, and the great banking systems and governments do it in competition with the people. This is the financial crisis." So it's interesting because this time the banks have done it first. So for people who are still sitting there thinking, I'll just sit on the fence for a while and wait till things get normal, the banks have already stocked up. I know you've been interviewed and others have as well on if the banks are taking care of themselves. Perhaps it's good for us to pay attention to that and follow suit. You also mentioned earlier about the global position of gold relative to other currencies than the dollar. Frank Stein asks, with the state of arbitrage all over the world in precious metals, do you believe that other countries may eventually allow the prices to move significantly higher irrespective of the COMEX or London?
No, because it all comes back, at least for now, it all comes back to dollars. So no, you have to pay more for it in those respective currencies because at this point, still gold is ultimately valued in dollars. So no, I don't think that'll happen because it rises in one currency. I mean, basically what that means is you're lowering the value of your currency in order to make gold higher priced in that currency. So no, I don't think it works that way in a vacuum it would, but not in a globalized world where, it wouldn't work that way because the arbitrage would mean you'd buy it in a different currency at a lower price.
All right.
Unless I'm missing that question.
Well, I think they're just talking about that the prices of gold in the West here seem to be manipulated or held down or managed at the COMEX, for example. But if they're rising to record levels in all the other countries, will that break the control mechanism that's being exercised by the COMEX if the rest of the world doesn't stay in step with that?
Well, yeah, but I think it's not really the staying in step with that as much as it is the value of the currency measured against the dollar. So it's the dollar that's too strong right now in respect to other currencies. So I don't know how they could let the price of gold rise in that currency independently, in the respect that it's the value of the dollar that is creating the distortions more than anything else. So the dollar is the prettiest mare in the slaughterhouse, and it's creating distortions in all of the other currencies in terms of its valuation in gold. So I don't think that letting it run up in a particular currency would be self-serving at all. It would just create the desire to buy it in a different currency.
All right. Skexes asks, historical production and above-ground physical in existence put the gold-to-silver ratio somewhere between 1 to 10, 1 to 4, 1 to 5. Spot price is some ridiculous number well in excess of 1 to 100. What is the actual ratio you're seeing based on your cost to acquire over the past couple of weeks or so, and how far do you see it snapping back when silver does make its move? Can it break the 1 to 40 mark like we saw in 2011?
Yeah, absolutely. It can very easily break the 1 to 40. What Keith Neumeyer says is coming out of the ground, he's the CEO of First Majestic, is about 8 to 1. Silver is found in the Earth's crust in a form called epithermal, meaning it's very close to the surface. All the big finds have been found decades ago. The big deposits have been found long, long ago. So you have to dig deeper and explore further and expend more energy and money to get silver coming out of the ground. And so, when you talk about a 115 to 1 ratio that we're seeing right now, that is the probably the greatest anomaly in price I've ever seen in 30 years. With the high premium in silver, it actually works out in practice to about 90 to 1 or so. But even still, that is world class in terms of what you've been able to do over the last 3 decades in playing the ratio. Ultimately, I think it snaps back exponentially. I think it'll snap back tremendously. I don't know that we'll see 8 to 1 or 9 to 1 or 10 to 1 or 4 to 1 like this person is mentioning. Certainly, it's within the realm of possibility at 8 to 1 coming out of the ground right now. But I think that at 115 to 1, it's probably the greatest opportunity in my career to trade gold for silver. And while there are no guarantees in life, if you look at the last 3 or 4 bull markets in gold, they followed the same pattern. Gold took off first and silver followed much later, but outpaced gold dramatically in terms of its rise. And that's typically what we would expect to see here. Gold go first, accentuated by the tier 1 asset accumulation by the central banks. But I think when gold does break through that previous all-time high of $1,940 in the US, that's when you're going to see massive run to silver. A lot of people will think that $2,000 gold is too expensive and they'll run to silver. Very quickly, that gap will narrow. And it hasn't happened yet. Silver is still being treated like an industrial metal. It's not. It's a monetary metal, and I think it will have its day. Quite frankly, I look at it as the most undervalued commodity on the planet and maybe the buying opportunity of a generation. And I try to say that with all due sincerity.
I meant to ask you this question. It's our last one. Back when we were talking about storage in different jurisdictions, you mentioned Canada. Historically, that's been seen as politically stable, low crime, that sort of thing. Douglas Purcell is concerned. Says, does Andy still think it's a good idea to store precious metals in Canada after all the recent dictatorial actions of its government?
Look, I would have thought that Switzerland was a safe place to store metals. I worked with them for a very long time, and then I watched the Swiss turn in people to the IRS. I watched them close all the banking privileges at Union Bank of Switzerland and Credit Suisse and kick all the depositors out. I look at the actions that Viamet took, kicking out U.S. depositors. But the bottom line is the actions that the Swiss took would have been considered unimaginable, joining the United Nations, selling off part of their gold, turning in depositors to the IRS, or forcing them to close their accounts before they do so. These were things that would have been considered unimaginable. I look at Canada as bordered by three oceans, as a country that has the strongest banking sector for 3-4 years in a row, surpassing Switzerland, a country that is very natural resource rich, a country that sold off, or the Royal Bank of Canada sold off its U.S. interests in banking. They still have brokerage accounts, but sold off their banking interests. Just maybe they don't want to be subservient to the U.S. Maybe they'd like to stand on their own 2 feet. Certainly, they have all the ability to do so with their infrastructure, with their natural resources, with their banking. In a world of imperfect choices, to me, it's as good as it gets, because all of the other choices that are outside the country, you need to get on an airplane or a boat to get to. In Montreal or Toronto or Vancouver, most places in the United States, you can be there within 24 hours by car. So while no choices other than having it hidden in your home somewhere are perfect, in a world of imperfect choices, I think Canada is as good as it gets. And quite frankly, in many ways, they're very similar to Switzerland, only on this side of the globe. And for my money, yes, I still keep an awful lot of my own metal stored in Canada Brinks, and I think that it is as good of a choice as you will find in this industry, period, outside the country anyways.
Well, I promised you that was the last question, but there's actually several more that I'm just going to condense into one. Busy Mountain says, can you please update us about large orders being conducted? Are you getting large order requests but finding it difficult to find or just slow to arrive? And who is typically making large order buys?
Yeah, we're getting large order buys in a manner that I've never seen before, on a repetitive basis. And those people call us and say that, someone that they are friends with or know have been telling them for years to buy gold. They haven't done it, but they're going to decide to do it now. And they're pulling out of the stock market, and they're pulling out with very, very large orders, 6-7 figure orders that on first-time deals. And as it pertains to gold, we've been able to deliver those pretty darn quickly. Gold Eagles, Gold Buffaloes have been okay. At least they are for now. Premiums are still at all-time highs, but I have been able to deliver those. In terms of silver, it's been more touch and go, although we are making good on everything that we've sold. Luckily, thanks to the Perth Mint, thanks to the Royal Canadian Mint finally catching us up. Silver's a little more touch and go, but the answer is yes. If anything defines this market move from previous, if anything differentiates it from previous, it is just that. It is the mainstream public finally dipping their toe into this market with substantial orders. It used to be that I would only get 5% of people's portfolio, and they would be very reticent or very, very, very open in telling me, look, I have a big portfolio at UBS, and well, I know I need to have 5% of my money in gold. Now it's the opposite of that. It's people pulling the lion's share of their money out of a volatile market after they watched it vaporize in March. And now they're looking to go somewhere safe. Now, it used to be the bond market, but they don't go there anymore with 0 or 1% interest rates trending towards negative. Now it's gold. And so you're seeing price inflation. You're seeing much more interest at a time when the supply chain is fractured at best. So, yes, we have been able to deliver, but here again, following my theme, my greatest concern is that trend continues. If it gets worse before it gets better, and that trend accentuates, in a matter of days, there'd be nothing left for the public. And we'd go right back to the same problem we had in March with very little, if any, product delivery delays and massive premiums. So right now, we still have the high premiums. The delivery delays are mitigated, and the availability is okay, but it's this close from that not being the case anymore. So, yes, the answer is yes. The answer is we're still delivering it, and if it gets much more in terms of mainstream interest, I would be very concerned on how that plays out going forward.
You made me remember that there's been some of the people who I've worked with have then had their sister, their brother, their cousin, their mom, their dad, their whatever who call up. So it's been amazing the amount of referrals already in just a short time. So word is getting out.
I believe that. No, I believe that. I do believe that. And it's a lonely existence having the beliefs that you and I do, Dunnigan, when you try to help your family and your friends, and most of them look at you like you have horns and that you're crazy. And that it's a subject that people really don't want to talk about, and you really want to help people. And by the time people wake up and decide that this is something that they need to do, most people will be shut out either due to much higher prices or just the inability to get anything.
Well, we've been speaking with Andy Schectman, CEO of Miles Franklin Precious Metals Investments. We've got more questions we can get to when we have you back on again, but thank you so much for visiting us this time and answering these questions on negative interest rates and storage and IRAs and limited availability as our economy and the supply chains try to come back online. We'll see how that goes, and we've got our fingers crossed for health and well-being of everyone out there. So thanks for joining us.
You take it easy, buddy. Always good to see you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.